Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. The exchange rates of the US dollar against the Iraqi dinar have experienced a slight upward trend in both Baghdad and Erbil markets. This movement is indicative of the subtle fluctuations that often occur in currency exchange markets due to various factors, which may include changes in local demand, global economic conditions, political developments, and market speculation. To provide a more comprehensive understanding of the situation, let's delve deeper into the intricacies of this exchange rate fluctuation. In Baghdad, specifically at the Central Al-Kafir and Al-Harithiyya stock exchanges, the rate for $100 was reported at 151,650 dinars. They are influenced by a variety of factors, including but not limited to supply and demand for foreign currency, economic stability, inflation rates, central bank policies, and international trade balances. For Iraq, whose economy is heavily reliant on oil exports, the fluctuation in exchange rates could also be tied to global oil prices, geopolitical tensions, or shifts in foreign investment trends. In addition to the stock exchange rates, currency exchange stores in Baghdad have their own rates for buying and selling US dollars. As of this latest survey, the difference between the buying and selling rates is a common practice in currency exchange markets and is often referred to as the spread. This spread represents the profit margin for currency traders and can vary depending on market conditions, transaction volume, and the availability of foreign currency. It's interesting to note that while the official rates at stock exchanges provide a baseline for exchange rates, actual transactions in the local markets often occur at slightly different rates. This can be due to a variety of factors, including local market conditions, the size of the transaction, and the relationship between buyers and sellers. In some cases, the rates offered at currency exchange stores may even be more favorable than those at the stock exchanges, depending on the specific circumstances while the buying price was just slightly lower at 151,600 dinars. The near parity between the buying and selling prices in Erbil suggests a highly competitive market with tight margins for currency traders. It also reflects a level of stability in the exchange rate, which may be influenced by factors unique to the Kurdish region, such as its semi-autonomous status, its own set of economic policies, and its relationships with both Baghdad and international markets. The slight variations in exchange rates between Baghdad and Erbil are not unusual and can be attributed to regional differences in economic activity, supply and demand for foreign currency, and even local political dynamics. For example, Erbil's proximity to the Turkish border and its relatively stronger ties to international trade may result in different currency flows compared to Baghdad, which serves as the political and economic center of Iraq. At this point, it's worth exploring why this can lead to higher prices for imported goods, contributing to inflationary pressures in the local economy. On the other hand, for those exporting goods or services from Iraq, a higher exchange rate for the US dollar can be advantageous, as it means they receive more dinars for each dollar of revenue earned abroad. For the general population, exchange rate fluctuations can have a direct impact on the cost of living. A weaker dinar means that the purchasing power of Iraqi citizens is reduced, as they must spend more dinars to obtain the same amount of foreign currency. This can lead to increased costs for everyday goods, particularly those that are imported, such as electronics, vehicles, and even some food items. Additionally, businesses that rely on imported raw materials or components may find themselves facing higher costs, which can then be passed on to consumers in the form of higher prices. It's also important to consider the role of the Central Bank of Iraq in managing exchange rates. The central bank has the authority to intervene in the currency market to stabilize the dinar's value by buying or selling foreign currency reserves. Such interventions are often aimed at curbing excessive volatility in the exchange rate, ensuring that fluctuations do not lead to economic instability. However, the central bank's ability to intervene may be limited by the size of its foreign currency reserves, which are largely derived from oil exports. In times of low oil prices or reduced export revenues, the central bank may have fewer resources at its disposal to defend the dinar's value. For instance, tensions between Iraq and neighboring countries, changes in international sanctions regimes, or shifts in the global geopolitical landscape can all have an impact on the dinar's value relative to other currencies. In the case of the US dollar, the strength of the dollar on international markets can also influence its exchange rate against the dinar. When the dollar is strong relative to other major currencies, it tends to appreciate against smaller, emerging market currencies like the Iraqi dinar. Conversely, when the dollar weakens, it can lead to a relative strengthening of other currencies, though the effects may vary depending on local conditions. Another important consideration is the role of remittances and foreign investment in influencing exchange rates. Iraq receives a significant amount of remittances from its citizens living and working abroad, particularly in countries like the United States, the United Kingdom, and other parts of Europe. These remittances, often sent in US dollars, can affect the supply and demand dynamics for foreign currency in the local market. A higher influx of remittances can increase the supply of dollars, potentially putting downward pressure on the exchange rate. On the other hand, if remittance flows decline, it could lead to a tightening of dollar availability and upward pressure on the exchange rate. Similarly, foreign direct investment, FDI, and international aid play a crucial role in Iraq's economy and can influence exchange rates. An increase in FDI or foreign aid can lead to an influx of foreign currency, which may help stabilize the dinar's value or even lead to an appreciation. Conversely, a decline in FDI or aid could reduce the availability of foreign currency, contributing to upward pressure on the exchange rate. Lastly, it is essential to recognize that the exchange rate is not just an economic indicator, but also a reflection of market sentiment and investor confidence in Iraq's economic prospects. When investors have confidence in Iraq's economic stability and future growth potential, they are more likely to invest in the country, leading to increased demand for the dinar and a potential strengthening of the exchange rate. Conversely, if investors perceive heightened risks, such as political instability or security concerns, they may seek to move their capital out of Iraq, leading to increased demand for foreign currency and upward pressure on the exchange rate. In conclusion, while the recent increase in the exchange rate of the US dollar against the Iraqi dinar may appear modest, it is part of a broader and more complex economic landscape. Factors such as local and global economic conditions, central bank policies, geopolitical dynamics, and market sentiment all play a role in shaping currency exchange rates. For businesses, consumers, and policymakers alike, understanding these dynamics is crucial for navigating the challenges and opportunities presented by currency fluctuations in Iraq's evolving economic environment. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.